Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of Hawaii CORP quarterly report. Bank of Hawaii Corporation offers a wide range of financial products and services to individuals and businesses across Hawaii, Guam, and the Pacific Islands. The company's key business areas include consumer banking, checking and savings accounts, residential mortgage loans, credit cards, investment management, brokerage services, insurance offerings, and trust services, commercial banking, commercial and industrial loans, commercial real estate loans, auto dealer financing, deposit products, international banking, cash management, and merchant services, treasury and other. Corporate asset and liability management services, including interest rate risk management and foreign exchange services. These services cater to various clients, from individuals and families to corporations, government entities, and foundations. The Bank of Hawaii Corp. BOH stock price has dropped by 7.02% in the past year due to a combination of general regional banking sector concerns and specific earnings reports. Economic uncertainty, interest rate hikes, and deteriorating loan quality have contributed to the decline. The bank's high concentration in the local Hawaiian real estate market also makes it susceptible to economic downturns. Despite positive financial metrics in recent quarters, including diluted earnings per share of $1.06 and increased net income, the stock price has declined due to broader market sentiment and concerns about loan quality. Analysts project modest revenue growth, which may have contributed to investor caution. The bank's inability to offset accumulated negative performance over the past year is a significant concern for investors. The primary drivers of revenue growth or decline can be identified through a review of the financial summary. Revenue growth is primarily driven by an increase in net income, with a notable 16% rise in net interest income. Additionally, non-interest income saw a 2% increase, while specific areas such as other income and bank-owned life insurance income experienced significant growth of 19%. Conversely, revenue decline can be attributed to a decrease in net interest income in consumer banking and a substantial reduction in net interest expense in treasury and other. Net income and profit margins. A changing landscape, the financial performance of a company has undergone significant changes between 2024 and 2025. Net income has increased by $7,717 from Q3 2024 to Q3 2025, and by $12,237 from YTD 2024 to YTD 2025. This represents a notable growth of 30.8% from 2024 to 2025. However, there is a discrepancy in the net income trend when comparing the 3 months ended September 30, 2025, which shows a decrease compared to 2024, but an increase for the 9 months ended September 30, 2025. Profit margins have also undergone changes. The net interest income margin decreased from 54.6% in Q3 2024 to 59.2% in Q3 2025, while the non-interest income margin increased from 49.1% to 51.9%. The return on average common equity has improved significantly, increasing from 11.5% to 13.59%. The net interest margin has also seen an increase of 28 basis points to 2.46%. These changes indicate a shift in the company's financial performance, with some areas experiencing growth and others facing decline. The company's financial performance indicates a trend of increasing positive operating cash flow. In 2024, the net cash provided by operating activities was $80,735, while in 2025 it rose to $138,490. This significant increase suggests that the company is efficiently managing its operations and generating sufficient cash to cover its expenses, indicating a healthy financial position. The company's debt level and interest expenses have shown mixed results over the past year. While there was an initial decrease in total debt by 0.4% to $14 billion as of September 30, 2025, a later page indicates that the debt level has increased slightly. Similarly, interest expenses have decreased significantly, with a notable drop of $41.2 million, 70%, in net interest expense. However, these changes are not consistent across all pages, leaving some ambiguity about the overall trend. The financial summary reveals a mixed performance across various segments and regions. Notably, commercial banking and treasury and others showed improvement, with the latter experiencing a significant decrease in net loss. Consumer banking initially saw an increase in net income from $36,922 to $48,076, but later declined by 9% and 8%. The money market segment performed poorly due to decreases in commercial and consumer deposits. Management is optimistic about the company's outlook, expecting strong financial results while maintaining prudent risk and capital management strategies. The company will continue to focus on delivering exceptional value to stakeholders through unique market knowledge, brand strength, and best-in-class service and innovative products. To achieve this goal, management is actively managing interest rate risk by optimizing net interest income and using various techniques such as adjusting the balance sheet mix and derivative financial instruments. Additionally, the company is continually evaluating its investment securities portfolio and making changes in response to changing market conditions. Management's capital management strategy aims to enhance shareholder value while maintaining levels above regulatory thresholds. The company may adjust its balance sheet positioning in response to market conditions to manage its capital position. Overall, management's focus on prudent risk management, capital discipline, and strategic investments positions the company for long-term success. The company's financial activities have been marked by strategic acquisitions and divestitures over the past 9 months. Acquisitions have played a significant role in the company's growth strategy, with a notable purchase of $738.1 million in available-for-sale investment securities. This move is expected to yield long-term benefits for the company. On the other hand, the company has also engaged in divestitures, including the termination of several interest rate swap agreements worth $1 billion. Although this resulted in a loss of $3.8 million, it demonstrates the company's willingness to adapt and optimize its financial portfolio. The company has paid dividends to its shareholders. Specifically, it declared cash dividends of $84.7 million on common shares, with a quarterly payment of $0.70 per share. This indicates that the company has prioritized returning value to its investors through dividend payments. While there is a mention of repurchase of common stock on page 9, this may be considered part of the dividend process and does not provide clear evidence of share buybacks. That concludes the financial summary for Bank of Hawaii CORP. Feel free to comment below, and I will be happy to answer them when possible.